Hey there, I've got one more fun little video on a topic that tends to come up at the end of every single year. And I find a lot of times it's probably worthless, but I found some interesting information that I thought I'd share. And maybe it'll help your mindset or maybe even help you a little bit. So that's why we're doing this one more video, right? Lots of videos lately. And here's probably the last one before we head into 2025. Now, predictions are precarious, as you know, right? It's the articles that people love to read, but it's also almost entirely worthless. Why are they worthless? Well, here are some stats. Uh, the CXO Advisory Group, I'm not sure who they are, but I'm sure they know their stuff, collected and analyzed a total of 6,500 forecasts, right? 6,500 predictions from 68 experts slash gurus. Don't like that word, but anyway, 68 experts on the U.S. market from 2005 to 2012. Okay. It's a lot of experts. That's a lot of forecasts, right? I think it's substantial, right? Statistically viable. Anyway, how'd they do? Well, in that study, only 48% of the forecasts were correct. And it gets worse. 2/3 of the gurus were wrong in the majority of cases. So we all get together and we think, oh, it's the end of the year. What should I do? And if you're on webinars, some that I've given or I've been on, or if you're a member of a trade room or something along those lines, what gets asked all the time? What's the market going to do? Should I get in? What's the market going to do? And thus they give predictions and people gobble them up and nobody really goes anywhere, right? Because if you listen to the gurus, you're wrong over half the time. So what do? Well, we have more problems than that before we even answer. We have a roulette problem, which is what I call it, which I'm sure I didn't make up. But have you ever watched roulette? I don't gamble, don't love gambling, but I love going to Vegas, love watching roulette. What would you do if you're sitting there watching a roulette game and you have 5 reds in a row? What would you do? I know what I would do. Because this is the way our brains are wired. If there's 5 reds in a row, we're going to bet black because surely, right? Surely it's going to be black next time. It only makes sense. It's not going to be red 100 times in a row, right? However, that's exactly what Vegas wants us to do, and it's not really helpful information. It just feels helpful. Now, take a look at this chart. This is the spider, the SPY. This is the 200 simple moving average, 200-day simple moving average. Now, the market hasn't been at the 200, right? A proxy for kind of fair value or at least equilibrium, right? This is 2024. This is October. So really since October/November of 2023, have we been anywhere near the 200? Look at this. Look. Oh, dip there. That July was rough, as you know, but bounced right back. Oh, we had a big problem with the Fed meeting in December, and kind of bounced back up. But take a look at the space. We are so far away still from the 200. Are we due to come back? Well, see, there's the problem, right? Is it a roulette problem? It seems like, it's why I drew this arrow several days ago. It seems like it's due to come back. And yes, mathematically, at some point, these two will converge. But if this keeps climbing up, they may not diverge to all the way up here. That's the fact. However, you look at this chart, and it's basically just 5 reds in a row, right? It's got to come back. So, thus, the guru prediction would be what? Market's going to go down, right? That's not all. Just 7 stocks this year, the Mag 7, are behind most of the market's 24% melt up. And it was 24% when I made this video a short time ago, right? Just a day or two ago. So market's been great. It's been a melt up because they call it a melt up because it's not really broad rally. Things are just keep going up and going up based on hysteria, euphoria, whatever. Anyway, it's melted up. Fun term. But it's only been 7 stocks. Meanwhile, the national debt, 36 trillion. That seems like that's a problem, right? That seems like maybe we're due for an economic bad period. Inflation is still too high, right? So that's why we're not really lowering rates, or that's why the Fed is kind of causing trouble. It caused that trouble in December because inflation is still not where they want it. They haven't made it yet. They may have to raise rates. Raise rates. They might have to raise rates to get it down. So that's a problem, right? And the market's been up 2 years in a row. Despite the fact it hasn't been near the 200-day simple moving average, it's been up. It's been up way. The market rises 8% a year. How much is it up this year? 24%. How much was it up last year? 20-some%, right? This doesn't happen. The market is due, right? Do you see all that? We've got the debt. We've got inflation. We've got way above the moving average. So what's the prediction? Given all that, what are the actual scientific, data-driven odds the stock market will go up in 2025? What do you think? I'll pause for dramatic effect. 73%. Right? Is that crazy? The odds of it going up next year are 73%. We have a 3 out of 4 chance we're going to be bullish again. Now, wait a second. How do we get that? Well, the market odds, according to Edward McQuarrie, who does probably the best historical research on the stock market I've ever read. You got to go find the white papers. He's not just out there as a guru on TV or writing articles for clicks. He does real hardcore research back to the 1800s, okay? McQuarrie is the name. Look him up. The market odds of the stock market rising in a given year are remarkably indifferent to what came before. Like roulette, right? Every roll of the roulette is unique. Every flip of a coin is unique. The market odds of rising in a given year are unique. Well, wait a second, Edward McQuarrie. What about after the years in which the stocks rose? 72%. Wait. We've had 2 straight years, right? And we've had a huge year in 2024, 72%. Well, we've been positive in the market in the last 5 years combined, right? Surely after 5 years of bullishness, the odds will go down about 72%, about the same. And after 10 years of advances, which is what we've seen, 73%. It does not matter according to the real science. Doesn't matter. The years after the stock market rises, doesn't matter. 5 years, doesn't matter. Bottom line, it sure feels like the market is overbought and due for a correction, but who knows when it will happen? The next year is a relatively short period of time. And there's nothing in the history that says because it's gone up, it's going to go down. And he's taken this back decades. So if you're thinking about getting started, but you're worried, let's say you want to start buying dividend stocks, or you want to start buying momentum stocks, or should I buy NVIDIA? What about Apple? What about all this? Is the market going to tank? The truth is the odds are clearly in our favor. Almost 3 out of 4 that the market's going to go up next year. Isn't that crazy? So maybe if you decide to start, maybe don't worry. Maybe, again, that doesn't mean the market won't go down. There is a 1 out of 4 chance it will go down. But waiting around won't make the odds better. And that's the huge takeaway. If you wait for the market to say, is it going to be up or is it going to be down? You could be waiting many more years. There's a 73% chance that the bulls will make money again next year, right? That's the fact. So if you're scared, at least maybe put that in your pocket and think it over. I love this. He's thinking about it. All right. If you want more like this, let me know. I have a dividend income program that you can inquire about. And you can always have comments or emails. Love to hear them. All right. Great talking to you. Hope this is helpful, and we'll see you again soon. Bye for now.